Corporate finance practice problem using OneNote. Payout ratio, dividend per share, and dividend yield calculations. Get ready. It's time to take our chance with corporate finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're in the icon on the left-hand side in the Practice Problems tab, then down in the 1814 Payout Ratio, Dividends Per Share, and Dividend Yield tab. Also note, when using OneNote, look at the immersive reader. Our practice problems will be down in the text area as well. Same name, same number, but with transcripts. Transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon up, we have our information up top. We have our calculations down below in the blue area. We're going to be doing our calculations related to the payout ratio, the dividends per share, and the dividends yield. Remember, when you're thinking about these types of calculations, you want to be able to understand the relationships between them. We're talking about basically the earnings bottom line of the income statement, in essence, net income, and the amount of them that would be paid out in the form of dividends, and the amount then that would be retained in the form of retained earnings that would be increasing the amount of retained earnings, in essence, on the balance sheet. So our information, we got the earnings, basically net income, $551,000. We got the payout ratio at 30%. We have the shares outstanding. We're imagining 1,000 shares outstanding and the share price at the 170. So if this is our 551 in terms of the earnings, basically the net income, and we know the payout ratio is 30%, then we can think about how much was paid out. When we talk about paid out, we mean paid out in the form of dividends. Dividends that are paid out to the owners, to the shareholders of the current profit or net income. So we got the earnings of the 551 and the payout ratio at the 30%. If we go ahead and calculate that here, let's bring on the trusty calculator. 551,000 times 0.3, that's going to give us the 165,300. Then we can think about the increase in retained earnings because, of course, the amount that wasn't paid out is going to be retained in the format of retained earnings, increasing the amount of the retained earnings on the balance sheet. Remember, this is not the calculation for the ending retained earnings. This is the calculation for the change in retained earnings for the period from the performance statement, how we did, for example, over the last year, and then thinking about how much of that we are keeping. And we'd have to add that to the beginning balance to get to the ending balance on the retained earnings on the balance sheet. So we're going to then say that we had, let's do it this way first. I'm going to say, okay, we had the earnings of the 551, and then we can subtract out the dividends of the 165.3. So in other words, if we had 551,000 of earnings and we subtracted out because we paid out 165.3 of the dividends, that's going to give us the 385.7 of the amount that we retained, that we have not yet paid out. We can also think of that from a percentage basis. You might say, okay, well, I could, and you want to see this in multiple different ways. You might have in your mind, you might say, hey, I only need one way of doing this. I'm going to memorize how to do that, and that's how I'm going to do it every time. But if you get the connections of different ways to do it, it's actually, then you actually understand it a lot better, and you can communicate it a lot better with other people that might do it in different ways and look up the answer in book problems or something like that, which is going to format it in the most precise way that they can, which is often not the easiest way to actually see it. So you want to see it in multiple different ways. So we could say, hey, look, if I have 100% minus 30% that was paid out in dividends, in other words, if of the net income we paid out 30%, that means we retained 1 minus 30% or 70%. And so the 100 or the 551,000 of earnings times the 70%, 551,000, would give us also that 385.7. Then we can think about the per share basis. Now, when you think about these types of calculations, we're thinking about, in essence, kind of like the equity section, which represents equity section of the balance sheet being basically the accounting equation, assets equal liabilities plus equity, or assets minus liabilities equal equity, equity being then the net value of the company or the amount of the assets that the owners, stockholders in this case, have claim to. The benefit of a corporation is that we don't have to basically assign who those owners are, like by name, as we kind of do in a partnership. But we have the shares, of course, to do that for us. So whenever you look at these calculations, we want to think about it kind of in aggregate as a total. And then we can basically break them out per set unit, which are basically what the shares are going to be. So then, of course, we can think about our dividends per share calculation. So we can say the dividends are 165,300. We're saying that there's going to be 1,000 shares out there. 1,000 of those shares out there, they're all, have the same dividend. That's the point, if they're the same type of stock. So if we take the 165.3 divided by the 1,000, let's go ahead and do that in the calculator for the fun of it. Divided by 1,000, we get the 165.3. That's one we should probably be able to do in our head right there, but the calculator gets bored if we don't use it. So we got to keep the calculator busy here. So then we have the dividend yield that we could be calculating, and that's going to be comparing the dividends per share that we just calculated up top to the price. Remember that the price is something that's not on the financial statements. We don't get that from the financials. That's dictated by the market. If it's a publicly traded stock, then of course we should have the active trading price, and that will be known. If it's not, then it's going to be more unknown in terms of what the price per share could be. But we can then divide that out. 165.3 divided by the 170 is going to give us, if we move the decimal place to 2 places over, the 97.24 about for the dividend yield.